New USDA reports changing the markets, double-digit fall for soybeans, and many other things to discuss with Jerry Gidel from Chicago, Illinois, right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Jerry, we had as a market reaction double-digit fall for soybeans and another fall not that substantial with for corn, but also a fall in the corn price. How do you see this reaction for the new USDA report?
Well, I think the USDA reports this month, we come into a time period here where we all had expectations that the USDA was going to make a pretty significant change in their corn number, and not a lot of change in beans, but in reality of it is that on the soybeans particularly, you pointed out that we had a 10 to 12 cent break on it today. The statistics that they came up with today, interestingly enough, I was only looking for a 10 million adjustment. Some people were looking for 5, but nobody was looking for a huge change here. We just thought that we'd see some slight decline, even if the trade average was just about unchanged. But they did an impressive 30 million increase in the U.S. exports, because we're up there within 10 or 15 of the current estimate at this point, and we still have a lot of ways to go here until September 1st. But excuse me, sorry about that. Turns out that instead of and one of the things, even if you had seen my pre-expectations, I assumed that they were going to make some adjustments in their residual. They had about a 21, 22 million residual and that last month's number. And considering the stocks report that did suggest that maybe the crop size, given the amount of stocks we have on hand, that maybe last year's crop was underestimated. So there was some room in that residual to take it down. They took 17 million out of it, and they also took a couple million out of seed. So you got and then interesting, they took 10 million out of the crush. That might be a little dicey, but it's possible. So all of a sudden we get 29, 30 million on less demand and less supply, and we've got 30 million increase in exports. So here we are unchanged in that. And so it wasn't a number that sparked us to new highs, things like that. The markets all quickly reacted right after the markets to the upside, but they quickly fell. Even the corn number fell right after. It kind of spiked up to 595 on May, and then it come back down, and it stayed generally nickel higher most of the session until right on the close. But the corn side of the data here today also had a situation where you kind of sit there and think about how the USDA came up with just a 75 million increase in their exports on corn for the coming year. We've got 5 months to go here, and interestingly enough, yesterday's weekly exports actually had our total export sales at this 1st of August, or 1st of April, at 2.617 billion bushels. That's 17 million over the USDA estimate. They increased the exports by 75. Look at that. We're only 60 million. 60 million yet to go to hit the USDA's estimate. Interesting approach. I think that seems like a pretty conservative idea, particularly after the Chinese bought about 170 million here less than three or 4 weeks ago. From there, they did increase ethanol by 25 million. They increased the feed usage because of the stocks number being a little less than expected by 50. So there you go. We got 150 million decline, and that's 50 million more than the average trade guess. But I'd have to say that probably the whisper campaign was a lot closer to 200 to maybe 225 million lower. on that number. So after the corn market tried to stay higher most of the day, basically because of the fact that that number doesn't really fit the bill in many cases. But at the same time, we have quite a few more months before we get to the final bell on this year's crop carryover in that. So you can't expect everything in 1 month, but this month particularly, there was some disappointments in the USDA's numbers on corn and soybeans.
How do you see the fact that China now recognizes that they are going to import a lot more corn?
That was something that came out, yes, like you said, either yesterday or this morning, that came out to acknowledge that, I think it was actually in yesterday's updates, that they finally kind of said, well, this 10 million we've been talking about imports on corn, boy, it's tough to really, when I can total up, they went up to 22, and I think there's a lot of people anticipate that number should be closer to 27 to 28 million metric tons. I can't acknowledge everything in one fell swoop, but at least they're in reality a thing. Now, the big thing that actually happened in the wheat market today that kept it firm, and it's not like our major crop to talk about, but interestingly enough, the USDA also, in their world numbers, increased the Chinese wheat feed usage, and so that brought their stocks down, and to some extent that helped keep that market on a firm toe, because we were 5 or 6 million metric tons, way below, actually went below the 300 million number, which we haven't been. That's part of the wheat story. This to quickly kind of follow that up is that the U.S. weather situation has really made quite a turn here. We've had some above normal temps here for, off and on for probably most of April and maybe a little part of March, in the latter part of it at least. And then we're getting the cool down this weekend, but there's a real big swipe of Canadian or polar vortex type of more cold temperatures coming in. And I think that's part of the reason why the wheat market also found some strength today, along with that adjustment in the world stocks, with China looking to feed corn. Now, that's kind of interesting in itself. That's maybe a little bit of a factor. Maybe that was their justification for only looking at exports going up 75, but wow, I guess we've already got a huge chunk of corn on the books to China, and so that really means that other people out there, the Mexicans, the South Koreans, the Asian countries, even Central America, are going to import less, and that's always an interesting statement, because when you kind of make those quick adjustments, saying, "Oh, people are going to buy wheat because it's competitive." Wheat's not the easiest thing to feed, so we'll find out how many people jump into that barrel.
What if we have further reductions in the Brazilian corn output?
That is probably the biggest factor we got to look at here, and you're exactly right. We still have a very late developing crop in Mato Grosso. The weather, 3 weeks ago, we were worried about it being too wet. We weren't going to get the beans out, and that was part of the reason why corn was, having some strength. Now it's turned the other direction, and wow, this is we're coming up on the first week or 10 days of April, and in the old days, sometimes the old dry season showed up in the 1st of May, or even late April. It's giving you indications it might be here already, but nobody really wants to believe that. If it is, wow, we could change that corn production number that the USDA left unchanged again today. 109 million metric tons. That's they were willing to jump up soybeans by 2 million. which I also have some issues with because we had such a wet situation in Mato Grosso. I've heard though that Goiás and Biafra and some of those other northern provinces yields have maybe compensated for some problems in Mato Grosso and that. But I think the other interesting thing in the world of South America and the USDA that came out today that we probably need to note is the fact that the USDA reduced their corn production number for Argentina by 500,000 metric tons, 47.5 down to 47. Well, that's not a bad move. But our friends at the Buenos Aires Exchange have a different idea of what size crop there is down there. And they were at 44 million metric tons going to 43. Now, that's a significant difference. I know that there's always a little, can be differences between opinions about crops, but that's quite a significant difference geez, we're talking 4 million metric tons. And that in itself could make a big difference in some of these things. So there's lots of things to discuss and find out and see how things go, both in Mato Grosso for corn and how things start to finalize out in Argentina. I guess this is some of the early corn that was planted on a normal basis is what they're looking at here. The yields are not that all good. Now, there is a later set of corn that's planted, after the wheat harvest and the soybeans. There's also some beans that are planted there. There's been a couple good rains down there in the last 6 weeks, and what just happened the last few days here on Buenos Aires and parts of Cordoba. No, those are helpful for the new crop or part of the crop out there, but there's a whole set of acres that were planted, and what I would call the normal season down there of in the spring period, and these other ones were a little later in development. So those are going to be discussions going forward, but I have to say that right now, at least, there's still room for discussion on what type of crop sizes we're going to have in Argentina and Brazil, particularly on corn.
Yes, it seems that for the USDA, when we have millions of metric tons reduced, they reduce just 1 comma.
They seem to, well, they have a tradition of being moderate on their adjustments, and we'll just leave it at that. You're exactly right as to making a dramatic change at one time that is not their normal approach. But I guess I think, unfortunately, one of the things by taking that approach sometimes, it gives the world maybe an idea that the crop that's there potentially is still going to be fine, or our supplies and our stocks here in the U.S. are going to be adequate. So nobody decides to cut back on their usage. And then all of a sudden, if you don't tell people that things are getting tight, then all of a sudden when it gets tight, it can be really tight, and the prices can be quite emotional. So I guess we'll find out who's got the best approach. This has been happening, not just this year, it's happened many, many years in the past. So their tradition of being moderate in approach, and it's the same thing to some extent, their yield estimates and things like that. That's generally a good approach instead of making dramatic changes back and forth and chopping around. Nobody likes that. But at the same time, you also need to acknowledge sometimes that when things, that's the interesting thing I think happened to us in corn last year. Let's just use that as an example. Yeah, in August last year, they had 181.7 bushel yield. We ended up with a 172. That's 10 bushels over the final number. Maybe we should have started like a little lower than that, and instead of starting so high in that. And I think maybe that's going to be a discussion, and there's going to be a very important meeting. That's a virtual meeting, and if somebody likes to join in South America or around the world, they're more than welcome. Ended up going to the USDA's NAS page, and they'll get you to sign up for it. And I encourage everyone to listen to that thing. It's a 2-day affair. It starts at 12 o'clock Eastern time for 3 hours, both on Wednesday and Thursday. And I'll be listening. I'll contribute a few questions to those people. They've had my questions in the past. I think they expect me to be a rabble rouser, so I'm looking forward to it.
Yes, last year we had a surprise that baking has increased with quarantines, and now we have a very different scenario with optimism after the vaccine rollout, with a very significant job creation in the US. So, how do you think that would impact the three major agricultural commodities?
Well, with the vaccinations in that are building up, and I'd have to say we're complete vaccinations in the U.S. We're somewhere between 20 and 30%, depending on where you're at in the country, and that. And boy, if we can get up there at 60, 70%, I think it'll be a very positive situation. The energy market has already jumped out there with the expectations. We're on the way, and they're building up stocks and things like that. And the prices going up. This is a seasonal factor in U.S. driving costs in the U.S. between late March through till July 4th, the holiday. It's usually pretty strong. And that the big question is that I'm not sure we're going to see as strong a situation of people going back to the office. That's a huge portion of the U.S. driving, commuting type costs, commuting miles that are put out there. And also, it's not the most efficient. It's not the ones where you get your best gas mileage. So, but the idea is positive to some extent on corn. It's a helpfulness in the ethanol side as we go there, and that because of expanded demand. The one interesting twist about ethanol right now is that we've had quite an interesting development over the last 5 to 6 weeks. We've had a strengthening number on the stick us back. It comes back from what's happened in February. We had a very low output because of the cold weather and things like that. We bounced back here in March and April. We've had our output going, but the interesting thing is our stocks of ethanol have dropped way back to some of the levels we had last summer. So we could really have a good expansion of ethanol because we could still build up some stocks here. And I think the twist of it is that we might need the DDGs, which is the byproduct of the ethanol process. It's called distillers dry grains, and that as a feed source because things are getting tight on the corn side. So that's the complicated approach for corn, but it's from the standpoint of demand on corn. I think there's a positive idea coming out of it from what's happening in the U.S. on the vaccination run. Wheat, you're kind of right. Some of the sandwich material, the wheat issues, things of that nature, maybe slide back a little bit. But interestingly enough, we seem to, in the U.S. at least, the buns we didn't buy when you're buying our hamburgers at the fast food joint, we're buying as bread in our shelves now. So it's been kind of balancing out. It's changed some, but not as dramatic as you might think it has by having more consumption at home versus at the fast food restaurants or at restaurants downtown. Now that's the real twist of that on the wheat side of things. Soybeans, wow, that has got really interesting here because the traditional situation is that the soybean oil scenario has really got pretty choppy over the last month or 6 weeks. We had a big conference of all the major analysts in the soybean and veg oil world back in Southeast Asia, and they were pointing out the seasonal situation of expanded palm oil and that type of thing. But the twist of it is that there's also a situation going on in the U.S. and around the world about utilizing biofuels and green environmental situations. That's the real twist of it there. I don't know how much we're going to back off. Maybe on a seasonal basis, we might have to find a little bit more supply in the world of veg oils. But at the same time, it looks like at least that there hasn't been any big adjustments. I think there has been a rumor that there might be a slight reduction in some of Brazil's bio fuel. And Brazil is a country that's been right out in front on this whole thing. They were big on ethanol. They were using sugar and cane instead of corn, but they're also big on burning vegetable oil in their trucks and stuff like that. And so that would be interesting if they made an adjustment there. That could be a little crack in the wall there for soybean oil on a worldwide basis if somehow or other Brazil decided to change their portion of veg oils in their diesel fuel in Brazil. So, but that's corn and soybeans get most of the impact of the excited and expanding U.S. and world economies. But let's hope that we get this vaccination rates going up around the world. I know that South America definitely could use a big boost, and the U.S. is trying to stay ahead of these variants too. So let's all roll up our sleeves here. This is a good time to all try to end up get ahead of this nasty old virus that's been plaguing us for over a year.
Yes, and what do you expect for as early as next week?
That's a good question. Next week is quite interesting because we didn't really close with any excitement. I think the key things we'll be watching will be the extent of this cold temperatures that are rolling in. What does it project on the impact to some of this wheat that maybe has got ahead of itself here, and that what impact it might have on our our planting situations on corn and soybeans. I'd say right now that I think a lot of people in the Midwest and around the U.S. were kind of waiting and seeing if this moisture would come in to help them, because there's been a little rain around, but it hasn't. Some of the soil moisture situations continue to be on the short side, and I think people were wishing they'd have a little moisture in the ground before they planted. From there, of course, the conditions in Brazil as to if there's a rain that shows up down there in Mato Grosso, there's some inkling that there might be something by the end of next weekend. At this point, that would definitely take an edge off the soybeans, and also probably provide something on the corn to give us some kind of ability to hang on a little longer for some of this double crop corn that's down there from that standpoint. So weather conditions in the final stages of Brazil and Argentina, and the planting conditions in the U.S. will probably be the focus of these markets. I'd have to say that probably, given the tightness of the crop and the attitudes about things, corn at this point still going to be probably the strongest one at this market. Seasonally, we got wheat harvest coming in the U.S., so that's going to be somewhat dampened. And soybeans right now needs to find something that's going to spark the idea that we're going to tighten this carryover stock closer to 100 to 110. Right now, there seems to be a ho-hum attitude.
We have seen a sharp Jerry Gidel. Thank you.
Good to be with you as always, Louis.